Good morning and thanks so much for tuning into the Trade Setup with me, Niraj Shah. I'm back after a brief holiday and the markets haven't missed me at all because they have been doing one thing and that is going up. In fact, the US markets obliged in Friday's session as well. The Dow may have been flat, but the Nasdaq and the S&P may have been flat, but the Dow and the Nasdaq certainly doing very well. Nasdaq in particular 1.29% higher. Asia should bring them up. Nikkei, Kospi, ASX, etc. all seem okay. It is China which is facing a little bit of a brunt, but otherwise the markets don't seem all that bad, and therefore the implied open should come up on your screen next, about 24 odd points. I don't think too many people will complain. Look at the magic number, 25,400. A month ago, everybody was saying it's curtains, and look at what the markets have done. And remember, this is very important because I'll tell you why. Look at this statistic. The Nifty has extended gains for the 12th consecutive session. This has never happened in its history. It's a bit of a historical run. Now, all historical runs come to an end. You could argue that after 12 sessions, what more can happen? But you could have argued the same after 10 sessions also, right? I think a move like this deserves recognition that this is not happening because some traders are coming in and buying into this. This is serious buying, and if corrections happen, they might get bought into. I still suspect that there is some steam left, so you might not see this die down so soon. I think there is some steam left on the index, so I would suspect that there is some more upsides here. Now, what's the trade setup? I think the momentum is in favor, and there is no reason to take the foot off the pedal as yet. It's looking like a strong market. Selectively, you can bet on the long side and things will give you returns. IT gave you returns, remember? FI flows in the primary markets are the highest since 2021. And in fact, because primary markets are doing so well, there is also an opportunity for listing gains. Remember, it's a very busy market this week because the key thing is, okay, one, September has seen gains in alternate years since 2018. 2023 was a year of gains. So could 2024 be a year of losses? Who knows? But like I said, the previous statement that the other avenue to make money is the primary markets. And why do I say this? Because aside of the fact that there are 8 NFOs this week, there are multiple IPOs this week as well. So from an IPO and primary market perspective, subscribing and making listing gains is back in favor. That is part one. But the only caveat is for this week in particular is because there are 8 NFOs which will suck liquidity, because there are multiple IPOs which will suck liquidity, maybe just maybe this breakneck rally that we've had might just peter out a little bit. I still repeat the first line that I said. I still think there is steam left in the market. There is no reason to take foot off the pedal. Do not try and sit on too much of cash right now thinking that you are smart. I think the time for that is maybe still some time away. It's been a great rally for sure in the recent few days. Just the caveat that I want to put in. It's great to look at optimism with a little bit of a caveat. And again, this caveat could have been true about a month ago as well. But I think Harish Krishnan of Aditya Birla Sun Life has put out this tweet wherein he's talking about how the Nifty 500 stocks with P multiples over 50. Look at that. I mean, through various years, this number is the highest currently. So the number of stocks trading at really expensive valuations, above 50 is expensive, right? Is the highest in a really long time. Over 50% of the stocks are trading with a P multiple of over 50. This points towards an overvalued market for sure. But like I said, enough pockets out there to make your meat, and you should try and look out for that. Now, what are the stocks in the session today that you got to watch out for? Sorry, so just, yes, let's keep this plate, but the summation, just so that you don't get confused. Are the markets expensive? Yes. Were they expensive about 500, 700 points ago? Yes, they were. And therefore, is it time to take the foot off the pedal or take money off and sit on 20, 30% cash? I still think personally that the time for that is still some time away. PCR is high, etc. is high, but maybe there is some more upside here. Now, stocks to watch out for. GSPC, Gujarat Gas, GSPL. Essentially, GSPL is in focus because the merger of Gujarat Gas with GSPC and GSPL has been announced. Now, the key statistics of the merger, I'm going to take some time here. The subsequent demerger of gas transmission business also announced, and the transaction is expected to close by mid-FY26. Now, what does it mean for you as a trader or an investor? Here's what I'm bringing it out. The swap ratio. 10 shares of Gujarat Gas for 305 shares of GSPC, which is a subsidiary. More importantly, 10 shares of Gujarat Gas for 13 shares of GSPL. and 1 share of GTL, which is the transmission subsidiary which will get listed, for 3 shares of Gujarat Gas. Everything is pegged to Gujarat Gas because all companies are folding into Gujarat Gas. Now, what does this mean? The swap ratio, which is the second line, which is 10 shares of Gujarat Gas for 13 shares of GSPL, that's the essential swap. That indicates an arbitrage of nearly 5% in favor of GSPL. So technically, if the prices stay constant, Gujarat GSPL shares have a 5% upside, or Gujarat Gas shares have a 5% downside. This is the one I'm talking about. The other point is that in lieu of this, GSPL shares have rallied 38% in the last 15 days already. So has there been a bit of a rally anticipating this? Yes, there has been. And therefore, is there more upside? Difficult to say that really. Maybe this is a buy the rumor, sell the news as well. But from a technical perspective, GSPL shares have a 5% upside, or Gujarat Gas shares have a 5% downside based on the swap. Jefferies is not so positive. So they say that on Gujarat Gas, they maintain an outperform rating. Their target price is 450, a 26% downside. Various reasons, of course, they say that the earnings volatility will rise due to inclusion of the trading business. That involves lower multiples, as lower valuation multiple as well. And they see 15% downside to the core value once merger takes place in FY26. So that's one. MK says reduced target price of 600. Now, very quickly through some of the other stocks. Century Textiles, Unit Birla Estates is in co-development pact with a group for 131-acre land parcel in Noida. It's a big one for Century Textiles. Expect this one to have a gap up start. Indian Hume Pipes gets an LOI for an order worth 859 crores. Very likely this one will see a bit of an upside today. SJVN, Railtel, NHPC, they have received Navratna status from the government of India. So all of these 3 stocks could be in focus today. Auto sales, what has come out thus far? For TVS, it's a positive because the expectation much better than estimated. Tata Motors, the expectation was at 10% downside. The CV business has shown a 15% downside. Tata Motors, a bit of a negative. Lifetime high weekly volumes for stocks like JM Financial, Star Health, and Leica Labs yesterday with some price action. Watch out for these. And Goldman Sachs on pharma, they've come out with a note. They said the base business is flat in July versus a 4% decline in June. And therefore, stocks like Aurobindo could benefit most from the current buoyancy in US generics. So watch out for Aurobindo Pharma in the session today. Remember, we are closer to the Fed rate cut than we were last month. And therefore, you should be optimistic. Thanks so much for tuning into the Trade Setup.